Good evening, everyone. K-Kim here with the Traders Club. Welcome to the market update. Today's March 24th, Friday. Market has been closed about an hour now. So today we're going to be looking at S&P 500, Russell 2000, and the financial sector. We'll end the video with the silver, gold, and metals. Miners. Let's get to it here. First, I want to kind of look at the oscillators here. I know that we've seen, like several 2 weeks of kind of a breakdown to the downside. Obviously, we are in the minor term bearish sentiment as of today with the intermediate term bullish sentiment, right? So we are pulling back within an uptrend, but because we've seen a couple weeks, possibly 3 to 4 weeks of a pullback since the all-time highs printed around 240s, I think it's fair to kind of look at the daily oscillators and see where they're at. This is actually spider oscillators. I do want to only focus on the stochastic today. Looking at this here, just kind of looking at 2016 price action, you can see that if you just kind of focus on the bottom here, this was 2000 April low, where this thing found support, very strong bounce there. That was a pivotal bounce, major bounce we've seen. But ever since then, this was the vicinity we saw a lot of buyers coming in. This was a May support. This was occurred early May. Again, this is a spider oscillator, stochastic oscillator. June 21st, bounce occurred there, late June. And then this was September, late September. We had a quick bounce, came back down, retested it, and then came back down to this was what? This was that the prior to the election bounce, right? November 4th, we saw that low bouncing, and then we're back at that level, exactly precise at that level, right? So I think a lot of short-term buyers, I don't think everybody's looking at stochastic, right? I don't think everybody is trading with technical tools, but I think most traders kind of trade with their intuition. So this all throughout the year, that's how trend gets established. If you just look at, you don't look at any price action, you just look at this oscillator that you're seeing on your screen, you can see that ever since 2016 bottom in February, this is after this kind of a decline, this is a vicinity where the dip buyers are willing to come in and bring the price back up. Thus, we've seen that price cultivating higher lows and higher highs since February 2016. So when we look at this oscillators possibly implying that this is a level to watch, right? So if I actually go back to the daily chart here, we are holding the 50 MA. As of today, we do not have any kind of candlesticks or any kind of patterns to tell us that there is a reversal candle. We don't see any kind of reversal candle. All we are seeing is we see this rising, uptrend support that we've seen since late December of 2016. You can see that here. Here, and then last several days. Also, we can note that the 50 MA is the first time, this is the first time we're seeing 50 MA acting as any kind of a pivotal level since October. October acting as, all through October and November, it was kind of a, October and September really was acting as kind of a resistance as the 50 MA starts to move sideways and decline a little bit. But ever since the November rally, the election rally, we have not yet touched 50 MA. This is the first time we're touching precisely. That's the level we have been moving sideways here, as you can see in the last 3 days. I want to actually look at 65 minutes, see what we're seeing here. Okay, this is 65 minutes of S&P 500 here. Interesting formation here. We potentially have bullish divergence. Tough to say. That bullish divergence will not confirm until this thing gets above 235.14. So if you really want to micromanage this, there's a chance it might even pull back, make new low, and take the stop out before getting back up. So I think this is a level to kind of watch this, hourly or 65-minute chart. This is a MACD. You can see that MACD has kind of rose higher. If the price action starts to go higher from this point on and gets above the neckline, what you're going to see is this lower low on the price action while the MACD kind of curve back up like this and form this bullish divergence. If that happens, if that gets confirmed, I do think that this will kind of gap back up to about 236 to 37-ish level. So let's look at the candlestick pattern here real quick. We do have what it looks like, what it appears to be a bear flag. But, you know, bear flag, textbook says bear flag usually, you know, resolves lower. But we are still in an uptrend. We are holding 50 MA. So I would have to say that right now we have a 50-50 chance that this bear flag is going to play out. Or it could be a bottoming pattern before going high. It could be a consolidation before moving back up. I mean, we've seen stuff like that, like move sideways here, move sideways there. This appeared to be an island reversal. This was a lot of people were calling that this was an island. If this was a gap, this gap down, this was an island. It looked like a bear flag before going lower. Well, it actually didn't. It actually kind of sideways move and continue high. To see that sideways move here and also the sideways move there. So a lot of times what you see is that these sideways move, you really don't know if it's going to be a bear. If this was a downtrend, however, right? Spider is not downtrend, and then we start to kind of bear flag. There's a higher probability that bear flag will play out to the downside. Actually, I'll put a link below, my video lesson link I've done on bear flag, so you can learn more about that. But because we're in an uptrend, are we in an uptrend in the intermediate to primary term? Yes. Because we're in an uptrend, I think it's 50-50. But again, if it was in a downtrend and we occur bear flag, it's higher probability that bear flag is going to work out. So that's the thing, is that just because we have this 3 days consolidation, I wouldn't come into a kind of quick conclusion that this is a bear flag. So that's the level to watch. Only thing I can say as of today is that we have a 50-50 chance it is break down or break higher. We do see that oscillators on the daily that we looked at on that stochastic, we are at that oversold territory. So that's the level to watch. We also looked at 65-minute bullish divergence formation that has not been confirmed. That's also the level to watch next week here. Let's continue on with the Russell 2000. I'll go through this quickly. Russell 2000 major support is at this level here, has been an important resistance all throughout, a strong support, and the last couple of days were support there, last 3 days. 100 SMA is acting as support currently. That's the level that it has been finding some support there. You can see that the long kind of a hammer-like candle, we did see, you know, really grinding higher move there, but we do have a minor term resistance, minor term downtrend. I am holding my full call positions. As of today, I haven't closed any of it. I haven't added it yet. Those are the levels I enter. Obviously, again, my target is much higher. So these several weeks of a downturn doesn't get me to be scared out of my positions, obviously. I'm just kind of want to see what's going to happen here. We have this kind of a minor term resistance, old support becoming a new resistance here. That's kind of level to watch. If this thing does break out to the upside, we probably going to retest this resistance level there. I think, you know, likely scenario for the buyers is that maybe get up here, make the equal highs, pull back, possibly something like that. For bears, I think next level of support to watch, if we do break down from this point on, is this level, right? There's a gap area, right? So there's a 2 level you can watch. Is obviously a lot of times a gap open level and then gap fill level. They both act as support. Sometimes it comes and fills the gap before seeing a bounce. Sometimes it comes to the gap area before seeing a bounce. So I think we have a kind of a good range to watch here next week or two. If this thing, you know, becomes a bear flag, then 132, 133 to watch. If we continue higher, is that resistance to watch. And oh yeah, let me put this up there. And then 138 to watch. Some of those levels there, we've been, I mean, obviously Russell 2000 hasn't gone anywhere since December. So I think there's a good potential, if this thing does move it to the upside, there's a good potential that it can move up here. But I think a lot of people are looking at this potentially a major topping pattern. That Russell is showing us a weakness, therefore, you know, maybe we see a much steeper correction. Well, that's kind of what happened on the Qs back in August September, October, November, December. A lot of people are anxious about the overall market while the spiders were rallying, Dow Jones was rallying, we got financial sector rallying, and Russell 2000 rallying in November. This was when the Qs were forming potentially a topping pattern, but it never really confirmed. Let me actually go to it. It really never confirmed. It was I'm talking about right here, and I talked about this last week also. It really never confirmed. We saw that, and it never really confirmed, and then it ended up rallying. You see that? So a lot of times you need a full confirmation when you're looking at patterns like this. We haven't confirmed. If this Russell 2000 confirm, you want to see this thing at least coming down below 130. If we see this thing start doing that, then there's a concerning signal in the overall market. But let's say if this thing starts to fizzle here a little bit, get up, come down, and then gets back up, then Russell 2000 might be that leader to lead entire market to the upside. So I'm really paying attention to the Russell 2000. I'm actually leaning more. I mean, I'm not talking about next week, but I'm talking about big picture, maybe next month or two. I'm leaning towards where Russell 2000 will become a leader again. Let's go to a financial sector here. XLF. This is a level, obviously this is an old resistance level, and we're seeing the resistance that looks like a bear flag there. And we're just kind of beholding this level here. We got the 100 SMA currently finding support, but that does look like a classic bear flag. But obviously we're still in an uptrend. I mean, this looked like a bear flag also right here. I mean, a lot of people say that looked like a bear flag right here, doesn't that? That actually does look like a bear flag, right? We had a double bear flag. We have been coming down here. We got this 20 MA coming down, and then something changes very, very quickly, didn't it? And then all of a sudden, boom, 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 got up, and then boom, right? So I'm not saying that that's exactly what's going to happen. So what I'm saying is when you're dealing with the uptrend, there will be more surprises for bears than bulls, because when you're in a bull market, a lot of times the favor of certain thing failing, there's a more favors to the buyers. Obviously, we did see pretty good amount of selling. So I mean, it would in our sense, as a humanistic way of thinking, it makes sense that there's a bear flag. We have a huge move, so it makes sense this thing sees some much steeper decline. But this is a level where, man, I really don't like to be shorting here, because this is a level where this could come down and look like this is, you know, cracking below, and then traps all the shorts and the longs, because a lot of stuffs are getting taken out, and then you see a long wick, and then this just, you know, rips right back up. That's how this market is a master at that. I mean, how haven't you seen it in Brexit, where this thing looked like this is a breaking major low right there, and then just brings right back up. This market is a major master when it comes to deceiving your humane way of looking at things and your rationale of, well, you know, we got up so much that, hey, it will make sense to see much selling, and maybe this is going to be a kind of a head and shoulder formation, and then maybe it should come back down to 20, 21. You know, it would make sense in our when we're thinking in our brain tells us that, hey, gone up so much, so it must come down. That is not true. That the market does not work that way. What we have to understand is when everybody expects certain things, it doesn't happen. Market knows that everybody's expecting it, everybody's waiting for it, so it does completely opposite or unthinkable. Does that make sense to you guys? Think about 2015 and 2016. How many people, how many experts, quote unquote experts, how many medias covering the fact that the whole world is going to nothing. We're going to have a massive crash, worse than 2008. And then it did the unthinkable. Nobody thought that Trump was going to win, but it did the unthinkable. Everybody thought that if Trump actually wins, the whole thing is going to crash, but it did the unthinkable. But it really isn't. Market always follows the majority. So don't look at it in a way that like it has gone up so much that it should come down. Instead, I look at it as we are in an uptrend. We are in a primary term uptrend. So really, the benefit of the Dow goes to buyers. It goes up, it pulls back, goes up, pulls back. What we don't know, what I don't know is I don't know where it's going to find the bounce. But what I do know is this market will trap bears. That's what it loves to do. It's going to do something where it's going to make it look like it's going to break down, and then it just goes right back up. So I haven't been shorting any stock. I've been holding all of my long. I haven't closed out any of my positions because I'm scared of this pullback. I'm holding all of my long positions. I haven't shorted any of the stocks, and I'm just seeing that, you know, if you can see any kind of bounce in the next couple weeks here, right? So if that makes sense, let's go to precious metals here. I'll go through them quickly. Silver again. I mean, like I was saying, I really want gold, silver, metal miners to do well because I really still want to go long on them. But we're doing some constructive work here. Looking at silver here, obviously we're still bound by this downtrend resistance. I have to look at that every single week to get a perspective where we're at. But we are seeing this inverted head and shoulder playing out. We've been talking about this inverted head and shoulder for some time. If this thing gets up, if it thinks do something like that, man, I'm buying that there. If we do that, that means we close above this primary downtrend resistance. We come up here and creates a new low, or not new low, but equal highs, and then we create pullback for another, you know, higher low. That will be the level. I mean, I'll be preparing to potentially go long if we can get above that primary downtrend resistance and above 1785. So 1785 is an important level. I'm gonna make that into red line. So next week when we talk about it, we will know certain levels. Let me actually move that to up here. Gold, this is a primary downtrend resistance going all the way from the top, so we still need to get above it. But gold, I really need gold to get up above 124 for me to get interested in going long. It needs to get above 124, but we're still in that downtrend resistance. Gold looks weaker than silver. We are just right on the resistance, so that's the level to watch going into this week here. Metals, miners, miners, we did see miners. I won't be interested in the miners until this thing gets above 2869. So currently it looks like silver is giving us the most constructive move, but GDX has formed this inverted head and shoulder. Currently this downtrend is level to watch. This right here, this downtrend is coming all the way from the top. That's a primary downtrend resistance, so there's a lot of level to go over. Again, I don't want to go long until these getting above all of that level. I wonder if we cultivated uptrend support here from, not yet. So we're still range bound, and let's see if we can able to work some of those through those levels. Well, have a good weekend. Good luck trading